Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you three of the most undervalued stock in the market today. I'm going to show you how to use this stock in order for you to realize a 30% upside. And most importantly, I'll give you a step-by-step walkthrough of my thought process and why I believe these stocks are severely undervalued. Now, if you are new to options trading, or you're trying to use options in order to make some additional income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be giving you my thought process on three of the most undervalued stocks in the market. I'm going to show you why I believe these stocks are undervalued, and I'm going to show you how to get a 30% upside on each and every single one of these stocks that I feature today. Now, you guys know how we do it. We like to go ahead and get down and dirty with options. So our first stock for today is going to be none other than CMG, and that's going to be Chipotle. Okay, so here we are on Chipotle, and to get started, we're going to go ahead and open up the Robinhood Advanced feature right here in order first to go ahead and check out the chart. I will be going to the 1-year outlook right here in order to see how the stock is doing. Now, based on the 1-year outlook, you could see this chart is absolutely beautiful. Well, at least absolutely beautiful in my eyes. The reason why I say that is that this represents the perfect chart pattern that I use to trade and make my investment gains. Now, let's start off with the 200-day moving average, which represents this blue line right here. The 200-day moving average stands at around $48 per share. Currently, the price is 31.66. So the current share price of 31.66 down here is a lot lower than the 200-day moving average. So that signals to me that there is some type of upside there to be had. Now, if we go down further and check out what's known as the RSI down to the bottom here, the RSI stands for Relative Strength Index. Now, what the RSI does is that the RSI is simply a momentum indicator, and it helps us determine whether a stock is going to be overbought or oversold. Now, if we go and draw our trend line onto Chipotle right here, we could see the RSI is trading around 33. 33 is going deep into oversold territory. So another signal that tells me there's a lot more upside opportunity to be had. As a comparison, when determining the RSI, the 50 RSI mark is like the center mark. So any RSI goes from the 50 going upwards towards the 70 RSI tells us that that stock is going into overbought territory. And the reverse of that is any RSI from 50 going down towards the 30 tells us that that stock has been met into oversold territory. So currently, Chipotle is oversold. Now let's go ahead. We're going to go back to Chipotle, and I'm going to show you some information that helped me to determine why this stock is undervalued and how I'm going to go ahead and make 30% upside when I decide to invest in the stock. Okay, so here we are on Chipotle, and I want to bring one thing to your attention, and that's going to be the price per earnings ratio. The current PE ratio for Chipotle is around 27.93. Now, this is by no means undervalued according to the PE ratio. Within the restaurant market, the PE ratio usually ranks between 17 and 25. So if you were to go off this matrix only, this is going to tell you that it's not actually undervalued. However, I do think it's undervalued. I'm going to go ahead and point out why I think so. So the 52-week low for this stock is 31.01. So as you can see, as of making this video right now, the stock is at a 52-week low. It's at all-time lows. Now let's go ahead. We're going to go ahead and check out the trading trends. Now, under the trading trends, you could see Robinhood investors like me and yourself, we are buying up this stock. If we go to hedge funds, we could see hedge funds actually did make a huge purchase. So they are buying more than they are selling. Now, let me go ahead. I'm going to show you what made me think that this stock has a lot more upside to come. The number one is going to be the analyst ratings. The majority of the analysts says that this stock is a strong buy. But more importantly, the 30% upside. The fair value for this stock is going to be around $46. $46 is going to be higher than the current price of the stock of around $31.66. So if the share price were to go up to meet the fair value, remember, we don't need this to go back to all-time highs. We just need it to go simply to the fair value, which is easy to get to. So if that does happen, it's going to be a 30% upside just from here. So if you are going to invest in this stock, you stand to get a 30% upside from the current share price. Full disclosure, I do have Chipotle in my portfolio and have decided to do the dollar cost average method in order for me to grow my position with Chipotle. If you guys want to see what option strategies I'm going to be using while I'm using the DCA method, just go ahead in the comments below and just type in options. Now, if you were to go down further, you could see down here that Chipotle just recently had earnings. Now, although they beat the estimated price per share, the stock still fell. Now, here's another thing that Chipotle has working for it. Now, I always tell you guys, always do your own research, always do your own due diligence. So, two major things that Chipotle has working for them. The number one thing is that Chipotle does plan to open 250 more locations within the next 2 years. That is a lot of locations. Now, I always like to look at a worst case scenario, because if you do look at the worst case scenario, then anything else is always going to be profit on the top side. So let's just say Chipotle only manages to open up half of that amount which you projected. Let's say they manage to open only 125 stores, then that's going to increase this share price right here, and then that's how we're going to make our investment gains. The next big thing Chipotle has going for them is that Chipotle is now going to be going into international markets. Imagine you take a trip over to China and you're able to go down from your hotel and you're able to buy Chipotle. Now, this is how this works, right? Even if Chipotle were to lower the prices right now, which is not going to happen, but let's say they were to go ahead and lower the price right now, the overall revenue is still going to increase. The reason why the overall revenue is going to increase is because the fact that they're going to international markets now, they're going to have way more volume. China has billions of people, and they're not only expanding in China, they're expanding in other European countries. So they're going to be making much more revenue. So like I said, I see a lot of upside in Chipotle, and I am going to be invested in this stock. So the next stock I have for you, which I think is very undervalued, is going to be none other than PYPL. That's the ticker. And that stock is going to be PayPal. Now, if you guys were following the news, you guys would have seen that PayPal has been down for a very, very long time. If we go over to the 1 year outlook right now and we look at the chart is not as impressive as the Chipotle's chart. Now, although the current share price is trading below the 200-day moving average, it looks like it's not that bad. However, if you do happen to go ahead and go all the way to the left, you can see from January, this stock was actually traded at $90 and currently it's below the $70 mark. So this stock has dropped by at least $20. So once again, I see some upside there. The current RSI is sitting smack at 50, but that does not bother me because I'm going to show you something. Although PayPal has been looking bad, in some situations, you always hear that things always start to look bad before they get better. So if we do go ahead and go out now to the 5-year mark, you could see that does not apply to PayPal. PayPal looked bad before and they still look bad now. So because they're looking bad now, I think there's a lot more upside to be had, because even if the stock do decide to go down from here, it's not going to go down as much as it will go up in the future. So that's why PayPal as well, I have decided to go ahead and open up a position with it, and I am capitalizing on the DCA model. Once again, if you guys want to see the options I will be doing on PayPal, just go ahead in the comments and just hit options. Okay, now I want to bring two things to your attention for PayPal, which tells me there's a lot of upside more than there is downside. The number one is going to be the PE. The PE ratio is 13.90, and this PE here is trading way below the industry average. So that points out to me that there's a lot more upside than there is downside. The next most important thing that tells me there's a lot more upside is going to be your dividend yield right here. I know it shows that there's nothing here, but as per PayPal's last earnings report, PayPal did declare that they're going to be paying dividends, and that should be starting off in December. So let me break down the dividends to you. The dividend is going to be 14 cents per share. So if you do own 100 shares, every 3 months, PayPal is going to be paying you $14. Annually, that's going to be work out to be $56 for every 100 shares you own in PayPal. So I think by paying dividends, this is going to attract a lot of institutional investors because they're going to be capitalizing on the dividends, number one. And when companies decide to pay dividends, their growth do not go up as drastically as they don't. So this is going to be nice and smooth sailing over the next couple of years as the share price begins to go up. Now, let me go ahead. I'm going to show you some more stuff that indicates that this stock is going to be going up once again. So if we go to Robinhood now, as usual, kudos to Robinhood investors, we are buying. Now, if we go ahead to the hedge funds, we can see the hedge funds are split between buying and selling. Probably they are locking in gains. But what I want to really show you is what the insiders are doing. As you can see here, the insiders are just snapping up every single stock. Now, the insiders must know something that we don't. So I'm a simple investor. What I like to do, I always like to follow what the insiders are doing. So the insiders see value in their stock, so they begin to buy it even more. Now, let's go ahead and we're going to go down to the trading trends and also the research report. Now, the one thing I disagree with right here is going to be the analyst ratings. The analysts do say that this is a hold, and I disagree. I think this is extremely, extremely strong buy. Even if PayPal were to go down from here, I don't see it going down significantly more than it's going to be going up. Now, if we go down to the research report, we could see that the fair value for PayPal is going to be $94. The current price of $69.32. So if the current price goes up to $94, once again, that's going to give you upwards of a 30% return on your investment. Now, I did mention this before, but I am DCAing in PayPal as well. Now, one last thing is going to be the earnings. PayPal did beat earnings according to their projections, and the share price still kept going down. And the reason for that is because the other matrix went down opposite to the earnings per share. Now, PayPal has some extremely, extremely strong competition. PayPal have competition from the likes of Stripe, Square, and the competition keeps growing. PayPal needs to go back to the drawing boards and they need to come up with some kind of plans for the future, especially need to implement their AI. And then I think this stock is going to go into the right direction. For now, I will continue to buy and I will be using options alongside my buy. Now, the last stock I want to bring to your attention is going to be Meta, and that ticker is going to be META. Okay, so here we are on Meta platforms. And for those of you that are young enough, you guys know what Meta is. And for those of you that are older, you guys know this is formerly known as Facebook. So we're going to go ahead and go into the advanced feature once again and go to the 1-year outlook to see how Meta is doing. Now, I have 0 Magnificent 7 stocks in my portfolio, and I've never had them because I always believed they were always overpriced. The reason why Meta came to my attention is because it is on my watch list and I did set some price alerts. I set a price alert for the 675 price. So when Meta hit that price, then it popped up on my watch list. So I begin to look at it. Now, currently you could see that Meta is down, and although it's only down just lower, a little lower than the 200-day moving average, if you go all the way to the top here, you could see the price was 750 and the price dropped all the way down to what is trading at now, which is currently around 650. That represents a $100 drop in like less than 24 hours. So that is huge. Now, if you go ahead, you could see that drop is also reflective in the RSI down to the bottom. You could see the RSI here was around 52 and the RSI came all the way down to 43. So hence this stock just jumped up on my watch list. Now, what I'm going to be doing with this stock, let's go ahead back to Meta. So Meta, once again, because the stock jumped up in my watch list, I decided to go ahead and open a position on Meta. I will be utilizing the dollar cost averaging method in order for me to grow my position with Meta. Now, once again, if you guys want to see the option strategies I will be doing, just go ahead in the comments below and type in options. For those of you trading with a small account portfolio, do not let this big price tag here, $651, do not let that intimidate you. There are option strategies out there that cater for people that have small accounts, so you can use those option strategies in order for it to go ahead and make consistent income with Meta. So you haven't already, now would be a very good opportunity for you to go ahead and subscribe to the channel for you to learn those option strategies. Okay, so the one thing I want to bring to your attention for Meta is going to be the market cap. The market cap here is $1.3 trillion. That tells you that Meta is not going to be going anywhere in the near future. Meta is pretty much here to stay. And that's reflective of its huge market cap. Now, if we go ahead and we go down to the key statistics, we're going to see that Robinhood, like myself and you, have been buying up on Meta. And the hedge funds, they have been split between buying and selling. But hedge funds do own this stock because it is part of the Magnificent 7, so they do have it in most of their portfolios. Now, if we go ahead and we go down, you can see the analysts rate this as a very, very strong buy, with more than 85% of the analysts saying this is a buy. Now, moving down to the research report, once again, I did promise you that every single one of these stocks will allow you to get more than 30% upside, and Meta is the same. The fair value for Meta is $850. The current share price is around $651. The difference between the two is going to be roughly around $200. If Meta, well, no, when Meta goes from 651 to 850, I definitely do believe Meta is going to get here. How long it's going to take, we do not know. That's why you need to join the channel to get the option strategies. But when Meta does move from 650 to 850, that's going to give you upwards once again of a 30% increase in your investment. So that's just one thing you should definitely, if you're not going to invest in it, at least put it on your watch list. Now, if we were to go down, we could see Meta recently had their earnings. Now, they smashed earnings when it comes to the actual earnings per share as opposed to the estimated earnings per share. Unfortunately, the other matrix did not please investors, and as I showed you earlier, the stock had a severe sell-off. Now, it's unfortunate that Meta had a sell-off. That's not good for the stock, but happily it did have a sell-off because that's good for me and you as well. This does give me and you an opportunity to get in this stock, which was previously more expensive for us to own. And I'm not talking about the price once again. It was more expensive because it was traded at a very high value. So now we have the opportunity to get into the stock in two ways, by investing and also by doing option strategies. So there you have it, investors and future investors. Those are the three most undervalued stocks that I think is out there right now. If you guys have not already, now would be the best opportunity for you to go ahead and like the video. Subscribe to the channel. Make sure to hit that notification bell to get an alert when I post a video. But most importantly, I do put out all this free content out there in order for me to help as many people as I can to start generating income from options trading. So if you guys know of anyone that's struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people as we possibly can start generating income from options trading. Now, until the next video, keep pushing your investments.